Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Tax season in California, it can feel, a little overwhelming, right? But what if I told you there are specific credits out there designed to put actual cash right back in your pocket? Well, that's exactly what we're going to break down today.
So, let me just ask you straight up. Are you leaving money on the table this tax season? I mean, let's be real. Taxes are a maze for pretty much everyone. It is so easy to miss out on money that the state actually owes you.
And look, we're not just talking about a few bucks here. We're talking about a potential $3,756 in cash back for some families. That's a huge deal. That kind of money could cover groceries for months or, really help knock down some debt.
All right, so let's get into it. We're going to walk through 3 key state tax credits that are specifically for working Californians and their families. Let's see how you can get that money back in your pocket.
So you got to know, everything really kicks off with one main credit. Think of it like a gateway. It's the California Earned Income Tax Credit, or CalEITC for short. This one is the key that can unlock a couple of others.
So what is this CalEITC thing anyway? Well, it's a tax credit for working folks in California with low to moderate income. But here's the best part. It's refundable. Now, that's a fancy word that just means it can wipe out any tax you might owe. And if there's still credit left over, that comes back to you as cold, hard cash.
Okay, so the big question, do you qualify? The good news is the requirements are pretty straightforward. You have to live in California for more than half the year, you need to be at least 18, or have a qualifying kid. Your earned income, that's just money you made from working, has to be somewhere between $1 and $32,900. And of course, you need a valid Social Security number or an ITN to file.
And this is where it gets really interesting. Just look at these numbers. Even if you don't have any qualifying children, you could still get back over $300. But if you have 3 or more kids, that number shoots all the way up to that max of $3,756. It's pretty clear. The more kids you have, the more cash back you could be looking at.
So, if there's one thing to remember, it's this. Qualifying for CalEITC is the absolute key. It's not just about this one credit. See, once you're in, it unlocks the door to even more cashback credits. It's a real game changer.
So, once you've unlocked that door with CalEITC, what's next? Well, the first one is a biggie, especially for families with little ones. It's called the Young Child Tax Credit, or YCTC.
And wow, the value here is pretty awesome. We're talking up to an additional $1,189 if you have a child under 6. And get this, that's on top of whatever you get from CalEITC. That's huge.
So how do you get it? The requirements are super simple. First, you've got to qualify for CalEITC. That's the key, remember? Then you just need to have a qualifying kid who is under the age of 6 at the end of the tax year. And your total income has to be $32,900 or less. That's it.
Okay, now listen up, because this is a really important special rule. Starting with the 2022 tax year, you can actually qualify for this Young Child Tax Credit even if your income was 0 or even negative. This is a total game changer, especially for gig workers or self-employed folks who might show a loss for the year but still have a young child at home.
All right, let's talk about the second credit that CalEITC can unlock. This one is really special because it offers targeted support for former foster youth. It's called the Foster Youth Tax Credit, or FYTC. The amount? Again, it's up to $1,189. But what's really unique here is that it's per person. So think about this. If you're married and both of you qualify, you could get that amount times 2. That's almost $2,400.
Now, the rules for this one are very specific. Of course, you have to qualify for CalEITC, you also need to be between 18 and 25 years old, and you must have been in California's foster care system at age 13 or older. It's really designed to give a financial boost right when it's needed most.
Okay, so we've talked about what these credits are and who can get them. Now for the most important part, right? How do you actually claim your money? Let's walk through the simple steps to get the cash back that you've earned.
It really just comes down to 3 steps. And the first one is so important. A lot of people miss this. You have to file a California state tax return. Even if you don't owe any taxes, even if you normally don't have to file, you still have to file to get this money. Step 2, you're going to use a specific form. It's FTB 3514. And finally, for anyone claiming that foster youth tax credit, you just have to consent to let them verify your status when you file. Super easy. And the best part is, you don't have to figure all this out by yourself, and you definitely don't have to pay someone a bunch of money to do it. The state actually has free resources to help. There's something called CalFile, where you can file your state return for free right with the Franchise Tax Board. Plus, there's the VITA program, that's Volunteer Income Tax Assistance, where trained volunteers will help you do your taxes for free if you qualify.
You know, this isn't just about filling out forms. It's real, meaningful support. I love this quote from the State Controller Malia Cohen, who said that claiming these credits can make a real difference for working families. It's support that you've earned.
So as we wrap this up, I just want to leave you with one final thought. Now that you know how all this works, just take a second and ask yourself, what could an extra $1,000, or maybe even a lot more, really mean for you and your family this year? Seriously, don't leave that money on the table.